Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good afternoon. Thank you as always for coming on today.
Happy to be here.
Well, stocks on Wall Street closed lower on Friday on expectations that the Federal Reserve is going to continue with its aggressive rate hikes. The S&P and the Nasdaq broke a 4-week winning streak, and the futures are lower right now. What's the story in the global markets as we start a new week?
Okay, well, on Friday, Dow fell by 0.86%, S&P by 1.29%, and Nasdaq fell by minus 2.01%. And for the week, S&P was down 1.2%, Dow was down by 0.16%, and Nasdaq was down by 2.6%. And as you said, it's probably the decline, especially toward the end of the week, was probably due to the Fed minutes, which show that the Fed was more hawkish than perhaps the market expected, and the possibility of a 75 basis point rise in September was perhaps higher than the market counted on. And also the period of high interest rate, when the high interest rate will be maintained, may last longer than, again, what the market expected. Another factor is about $2 billion worth of options contract expired on Friday, so that may have added to volatility as well. But because the market is reassessing the probabilities of 75 basis point rise on September, it does seem like the stock market, not only in the United States but around the world, is falling. While the oil prices have fallen for the United States, food, services, shelter, and manufactured goods prices have risen. So July monthly inflation just for that month was 0%. Oil prices went down, but other prices went up. And the Fed, I think, is somewhat afraid that the inflationary momentum has spread to a wider array of goods than just oil and food. There's no FOMC meeting this month, but there's Jackson Hole meeting coming up from Wednesday to Friday, and Chairman Powell is expected to make a speech on Friday, Korea time. So in the speech, lots of analysts are going to try to get hints on what the Fed is going to do for September and the rest of the year. Year to date, Dow is down by 7.87%, S&P down by 11.84%, and Nasdaq down by 19.8%. European market today, they're a bit. They were down on Friday. DAX, CAC, and FTSE were all. DAX and CAC were down. FTSE was slightly up, but they're all expected to open slightly lower today. The European markets also seem to be in a holding pattern before the Jackson Hole meeting. German producer price index had the highest jump on record in July, and German energy prices were up 105% over the last 12 months. German inflation rate is now expected to be 6.1% in August. The United Kingdom inflation rate is in July much higher, 10.1%, and there are concerns that Britons will face cost of living crisis this winter with high energy and high food costs. Asian market today, Nikkei and Hang Seng were down. Shanghai was bid up. Japan, July inflation was 2.6%, and Bank of Japan has said that they are unlikely to change policy stance, so they will be going with relatively loose monetary policy for the foreseeable future. China lowered its key interest rate again today. 5-year loan prime rate lowered from 4.45% to 4.3%. 1-year prime loan rate down from 3.7 to 3.65.
Well, now, Professor, with the Korean won, the exchange rate now at its highest point in more than 13 years. That is, it continues to get weaker. Korea's main stock index, the KOSPI, closed significantly lower today. Foreigners returned to net buying. What's the story in the Korean market, including the currency?
Okay, well, the currency changed by 11 won just today, so that's a major change, and that seems to have affected the KOSPI and KOSDAQ market as well. KOSPI was down 1.2%, and it ended today at 2462.36. KOSDAQ was down 2.2%, 7.5%, ended today at 795.87. And the attributed reason is because of the exchange rates. But I think there is two factors which lies behind the rapid changes in the currency rates. The first is the large trade deficit that the news came out this morning. The August exports rose by 3.9% during the first 20 days of the year, but imports rose by 22.1%. So the deficit for the first 20 days of August is 10.2 billion won. $1 billion, sorry. And for the same period, for the year so far, the trade deficit is $25.5 billion. And it seems likely that Korea may finish in the trade deficit for the entire year. Exports to China is down 11.2%, and it will likely be in deficit for fifth straight month. So the weakness in Korean trade deficit, as well as the readjustment of the expectation that U.S. will raise the rates by 75 basis points, while Korea right now seems like it will raise the interest rate only by 25 basis points on Thursday. It seems like people are readjusting their expectations, and that is causing a large change in the exchange rate. And we will probably see the continual weakening of the won until at least one of these two things happen. First is if the trade deficit turns to a trade surplus, that may turn the won to a strengthening trend, or if the U.S. halts the rise in interest rates. But neither of those things are likely to happen until at least the end of the year, and probably it will last until sometime early next year.
Got it. All right. Well, this week, Professor, you mentioned the Jackson Hole Forum. We're also due to get consumer data from the Bank of Korea and a decision on interest rates. What's on your radar in the week ahead?
Okay, well, on Monday, today, we were supposed to get the second quarter regional economy report for Korea. And then on Tuesday, Bank of Korea has the consumer trends and sentiments report. On Wednesday, we have the business sentiment and economic sentiment report that hopefully will give us some indication on how the consumers and firms feel about the near future. On Wednesday, there's second quarter household credit report. And on Wednesday, we have the Korean population trend and the population movement report coming out. And then on Thursday, this may be the most interesting, July Producers Price Index. For foreign variables, we have the new home sales coming out for United States, new home sales for July, and core durable goods orders coming out on Wednesday. And this is the big one for the United States, personal expenditures and personal expenditure price index report that is supposed to come out on Friday.
All right. We'll keep an eye on that, Professor. Thank you, as always, for coming on the program. We appreciate your insights.
Thank you.